Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a breakdown of the action in today's session, Wednesday, September 13th, where we saw a mildly mixed day on the index level, and we've got some more headlines coming out tomorrow, Ken.
No doubt about it. More economic data tomorrow, but we did find three stocks that are looking pretty good in this market. Let's take a look at Airbnb, which was today's stock of the day. I think you can still find that on the homepage of investors.com. Cadence Design Systems, CDNS, and finally Ingersoll Rand. There's been a lot of leadership in that machinery general industrial group, but Ingersoll Rand flashed a sell signal today.
Okay, well, we'll check on those three stocks here in a minute, but first let's take a look at the major indexes today. The Nasdaq in the green, up 0.3% to lead the session. The S&P 500 up 0.1% today. The Dow off by 0.2%, and small caps definitely some weakness there with the Russell 2000 down 0.8% today. So Ken, mild action today, and it looks like, if we get some market moving headlines tomorrow, we could go either way in this market. And we're at a key point here, a key juncture.
Yeah, it really is a key juncture, and you're right that the market could go either way. I mean, we've been talking about sort of increasing signs of distribution, particularly on the Nasdaq, but also the S&P 500 to some extent. And there, we're just looking at kind of higher volume declines since we got that, the follow-through day and confirmation of a new uptrend in late August. Today, the market was just kind of moving around, not moving much in either direction. I think the Nasdaq was up maybe as much as 0.7%, and closed off highs. But just going through a lot of growth screens, there was quite a bit of damage. Again, below the surface, we had a lot of oil and gas stocks that have been great outperformers of late. They lagged the market, and saw a lot of stocks down 3 or 4% today. So breadth wasn't too bad. Losers beat winners by a little less than 2-to-1 on both exchanges, so breadth wasn't terrible. But the market's sort of at a crossroads here, and we've been telling people to be conservatively invested at this stage of the game.
Yeah, that makes sense. Okay, over to the S&P 500 down. Russell, real quick, here's the S&P, very similar scenario. So it seems like pretty quiet volume and a narrow trading range, again, at key levels. And I guess one good thing about that, Ken, is if you do get a break either direction, of course, anything can happen, but it does tend to give you a little bit better of a sense directionally to make a bet, an incremental bet, not an all or nothing bet. It's pretty rare, if ever, that we would want to do that, but it can give us a little bit of a clue as to the direction of things.
Yeah, I think the S&P 500 and Nasdaq Composite, I mean, they're both kind of dealing with round numbers here. The S&P 500 just under that 4,500 level. If we can get a move above 4,500 for the S&P 500, and then it can just kind of trade sideways above that level, I think that would bode well for the uptrend. Still hasn't happened yet. It could. And same for the Nasdaq that we just looked at. 14,000 is the key level here. So if the Nasdaq can, somehow get back above that 50-day line, reclaim the 14,000 level, then we might feel more confident that the Nasdaq will be able to restart an uptrend here. We're under pressure for now, and seeing some yellow flags in the market. So we'll just have to see how tomorrow plays out.
Yeah. Definitely, the bulls want to see the retaking of those round numbers. That would be a great development. Let's take a look at the Dow. So it does seem like we are continuing to hit a little bit of resistance right around the 50-day line. So that also could be in the cards for the S&P 500 and NASDAQ. And it seems like there's a pretty clear level for the Dow to get above as well, whether you're doing a declining tops trend line or even just a horizontal line. There's some clear resistance here that we'd like to see it get above.
Yeah, not so much a round number that we're dealing with the Dow. That's comfortably above 34,000. But yeah, like you said, it's just sort of at a crossroads here, along with the other major stock indexes. So we've got a consumer price index report that was kind of basically mixed. I think the core year-over-year prices were in line with expectations, up 4.3%, and then the year-over-year price is up 3.7%, and that was a little bit above the consensus. But overall, I mean, yeah, I don't think that the inflation data did much to sway the Fed, and the meeting later this month are very likely going to hold rates steady, and then the market is still debating another quarter point hike before the end of the year.
Mm-hmm. And let's take a look at 0RUS. This is the Russell 2000 week close here today. And our Dow Jones market data team tells us that this is the first close below the 200-day line for the first time since June 5th of this year, snapping a 68 trading day streak above that level, Ken.
Yeah, I mean, the Russell was the worst performing index today, and to see that close below the 200-day moving average, not great, but you can see it's still holding above that recent low. It looks like 1830.84. So that's a support level to watch from here, but certainly small caps look to be in the worst shape at this point.
Next on the list, let's take a look at RSP. So a signal of the lack of breadth here in the market. Can the equal weighted S&P 500 ETF off 0.4% today versus the S&P 500's gain of 0.1%. So underneath the surface, as you mentioned, with losers outpacing gainers and just the lack of setups, I guess, and breakouts and stocks that are working, this is definitely reflective of that.
Definitely. Yeah. Like I said, breadth wasn't terrible today. It wasn't like we were, 3-to-1 negative, 4-to-1 negative. Losers, again, just had a slight edge over advancers on both exchanges. But you mentioned S&P 500 up 0.1% today, and RSP down 0.4. So it's just kind of reinforcing this kind of lack of breadth or poor breadth in the market. That's another yellow flag. So we're just dealing with a lot of yellow flags here. David Ryan was on IBD Live earlier this week on Tuesday and saying, well, it's a market where you can, make some money on the long side, and you can also make some money on the short side. So that always makes for a tricky environment, because you can feel good about making money on the long side and then see those gains disappear in a day or two. So it's a challenging environment, but that's why we're, again, just kind of recommending a cautious approach to stocks here. It's okay to have some exposure, but no need to be going all in at this point.
Yeah, a stock picker's market, no doubt, right now. And Ken, your thoughts on the 10-year yield action today?
Well, you can see it went all the way up to 4.34% after the inflation data came out, and then there was a sharp reversal lower. So this wasn't a whole lot of help to the Nasdaq. The Nasdaq's been kind of spooked by higher interest rates, and you see this big rise in the 10-year Treasury yield, and you've seen tech stocks falling. But some weakness in the 10-year yield today. To me, it looked like a very notable move here. I mean, it was a big outside day, downside reversal. So we'll see if we can get this 10-year yield to cool off, and maybe get the U.S. dollar to cool off a little bit. That could usher in some more buying on Wall Street, but that remains to be seen, because you can see the UUP here, which is basically a long U.S. dollar index ETF, is still in a very strong uptrend here.
It sure is. And Ken, in terms of sector action today, XLI, a notable move to the downside here.
Yeah, well, the industrial stocks were under quite a bit of pressure as well. We mentioned weakness in oil and gas stocks, solar stocks, airline stocks, but I thought it was interesting. We're going to look at Ingersoll Rand in just a moment, but a lot of selling among industrial stocks today. I thought that was noteworthy, and you can see XLI kind of broke below a recent low here of looks like 105. So this is kind of in a weak technical picture as well.
Mm-hmm. Okay, moving on to some stocks. Here's a look at Airbnb, which was our stock of the day. Not because it triggered a buy signal, but it's working on a base, carving the right side of a cup with handle, or a cup, and could be now forming a handle here.
Yeah, plenty of stocks that you can put on your watch list here. So I would say Airbnb is should be front and center here. It hit that low just above 120. As it rallied back, it did so in some pretty good volume. So you can see why that accumulation distribution rating of A minus is as high as it is. That points to a stock under some accumulation here. 4-day win streak ends today, but the decline, even though down 1.9%, looks like it could start to add a handle here. So the handle forms when sort of the last remaining sellers get shaken out of a stock. So if it can form that handle, hold above these support levels, could pave the way for an upside breakout. But again, it's going to need a healthy market to do that, and market health is a little bit sketchy right now.
Mhm. Yeah, definitely. But a good name for the watch list. And if this handle continues to develop, it seems like maybe it would get support at the 50-day line and the 21-day line, which are converging just below that 140 level. And this is a strong group. Leisure travel booking 25 out of 197, and Airbnb here impressively with a top IBD composite rating at 99. So
Yeah, I
good,
mean
good one
the
for the watch
revenue
list.
growth. Revenue growth has been there for quite some time. You can see it's been slowing a little bit in recent quarters. That's not a deal breaker. Pretty decent estimates here. And you also have booking in this group, BKNG, which again we're seeing a lot of stocks looking vulnerable here, but booking is still looking pretty well after a breakout from a little base here, and pretty close to a first test of the 10-week moving average. So you're right, the group still looks interesting.
Next on the list, let's take a look at CDNS. This is Cadence Design Systems in the computer software design group, working on a cup with handle up on the week. We've seen quiet volume as this base has formed here, especially that right side, but a compelling looking chart pattern to you, Ken?
Yeah, I would say so, and I think for people just kind of learning what a proper setup looks like. I mean, this checks a lot of boxes here. It's a relatively shallow pullback down to the 217, 218 level. It rallied back. It is now kind of pulling back and finding support after bumping up against that 250 level. So again, a good technical setup here. You've got that little shakeout going on over the past 5 days or so. Volume has generally been light. So another good one for the watch list. It's sort of an ancillary semiconductor play because
Right.
the electronic design automation software is used by a lot of chip equipment companies, chip makers as well. So kind of a little piece of the semiconductor sector here with Cadence Design.
Mm-hmm. And last but not least, IR, Ingersoll Rand in the industrial space. A nice uptrend for a couple months this year, over the summer, May to August, but triggering a sell signal today with that heavy volume decline breaking below the 50-day.
Yeah, this is a strong industry group. We've been talking about broad-based leadership in this general industrial industry group. So we're starting to see some stocks break in this group. Not every stock, but Ingersoll Rand certainly a big leader in the group, and there was a higher volume drop through the 50-day moving average. So a classic sell signal that IBD teaches. So if you've been in this stock with a profit, you have reason to at least exit some of the position, if not all. Again, there was volume's been pretty heavy in recent days, and break of support, just not a good sign. The technical picture has weakened quite a bit. I did want to throw two more stocks in this group that we've talked about in the past. Parker Hannifin, I think is PH.
PH, yep.
Yeah, I think it's PH, Parker Hannifin. So here is another sell signal in the group. This is the weekly chart. So a break of the 10-week line. Let's look at the daily chart here. And you can see there was some quite a volatile move in the stock today. And another stock, Flowserve, that we've talked about, FLS, also in the same industry group. So when you're in a market that's showing signs of weakness, it tends to go after a lot of leading groups in the market. And you can see the selling in all three of these stocks was pretty violent today. We didn't get a break of the 50-day for Flowserve, but look at the volume and big sellers in the stock today. So this group is starting to look a little vulnerable.
Yeah, could be a warning sign. We'll have to see, or at the very least, maybe just rotation or base building for these names. Only time will tell, but always good to follow those sell signals when they present themselves. So thanks so much for pointing that out for us.
And then tomorrow, real quick, I mentioned producer price index. That's due at 8:30 a.m. Eastern time. We've also got August retail sales, which is a noteworthy economic report. And then Thursday after the close, a big earnings report from Adobe. So some more interesting headlines to ponder tomorrow.
All right. Well, we are ready to tackle all of that, and we will starting tomorrow morning on IBD Live, investors.com/IBD Live for all the details on that. We'll see everyone there, and we'll also see you right back here tomorrow at the close.